What's going on? So we have a trade review to talk about today, and so far the month of March, although I didn't trade like the second week, you can see in the top right corner, at all, I was away, has been off to a decent start. I'm actually up on the month so far with our new strat that we are focusing in on, and I want to detail a little more into that strategy and just talk about some of these trades today, how they played out, and stops, the targets, all that good stuff, and how it's working, how I'm feeling about it. So that's the purpose of today's video. If you guys care, great. If you don't, off. Let's dive in. So maybe that was a little harsh, but let's dive on in. So, okay, this is the 14th of March, the day that I'm recording this video. $104. Do I give a shit about the number? No. I'm more so concerned about the strategy, what goes into this number. Trading minimal size. I had 3 contracts of Apple, 1 contract NVIDIA, which paid nice, and then 2 of Microsoft, which also paid nice. And so you can see the net ROI on these options, 13% on the winners and a negative 0.5% on the loser. So at a glance, this risk reward profile, just looking at that, if I'm taking 10+% on winners and I'm losing less than 10% on losers, that's pretty good. And we're at a 66% win rate for the day. So let's dive into it. The first one of the day was Apple, and then we kind of made that. We had a little bit of a loss. This actually was a bit deeper of a red hold. It got very close to stopping me out. And that was down here about, let's see, that was about 10-15 minutes into the trade. So let's go back to Apple and talk about what I liked about it. But in terms of when I got into this trade, this is nighttime, Central Time. I actually entered into this Apple trade at around 9:03. And then I was completely out of it by 9:56. So less than 1 hour total trade time. So let's jump over here. Pop up over to Apple, and here's the daily chart. I don't really care about that. I mean, obviously it's important, but the purpose or the importance here was what was happening right now. And so I've got my line still leveled out there. I didn't take it off. And here's what I saw. I'm looking at this and I see Apple with a push up pretty close to yesterday's highs. So I know we've got some strong momentum. We're up towards the highs. You don't want to be, you're looking for a contrarian trade. A contrarian trade meaning that, hey, I want to short this. Yeah, sure. But if we break out, I want to go long is kind of my thought process here, right? So I go long on the break of this, almost a double top here off the open or off the first, 20-30 minutes of trading. And I go long right in here. Now, I was originally down, but we held the VWAP. So that was my stop loss. I was staying in. Looking back, I had kind of looked back and I said, hey, this is like my worst case scenario risk down to the bottom of this candle. If I had held that far down, that would have honestly been too much on the risk side. So I said, as the VWAP was respected there and that continued to kind of hold up, if that were to break down, I was getting ready to cut this position. Okay. So we ended up bouncing there. Then I was, okay, well, that's pretty simple, straightforward. That is going to be my stop loss under that level. And I had 2 contracts that I bought here. I added a contract somewhere on this candle, and we can go back to the logs and you can actually see that I did that. So I had the 2 that I bought at $2.10, and I bought that extra one at $1.81, which brought my average down to around $2 or so on the contracts. Okay. I then sold a contract for $1.93. That was essentially me kind of fooling around. To be honest, was it the smartest way to play it? Probably not. Am I super proud of doing that? Should I do that in the future? I don't think so. But I bought that contract, that additional one somewhere in here, as I saw we had bounced off that VWAP. We built a higher low. I liked it. Put a stop loss right under here. So the risk was minimal. I took that off as we got up into this area. So I quickly took it off up there, and then I was okay. Now I can get back to where I originally had my 2 contracts. A little bit of decay, because if you're going to go back in time, we made a new high on Apple here at 9:30 a.m. my time, but I don't believe the contracts did. So if I go back to the contracts and how they traded, you can see that at 9:30 a.m., which was like right here, these contracts were trading for about $2. $2. But right here around when I entered the break on around 9:05, I paid around $2.10. So there was some decay there for sure. Okay, so here's 9:05. I paid about $2.10. 9:30, we come and test that high, make a new high right after that, and they were $2. So there's some decay there, which kind of played against it. Also, why I was just kind of being proactive and taking the gains there because on that one contract, just because I just didn't want to get screwed. Had, let's say we dump back to the downside and it kind of blows me up, not blows me up, but has a bigger loss than I maybe want to or than I need to for a trade that's really not that bad. It wouldn't have been a big downside move on Apple to stop me out. It wasn't like I held this thing too low. Then I take some more gains into a new push to highs up into here, I believe. This is going to be around 9:45 to 9:50 a.m. You go back in time. Let's see when I took that next one off. 9:40. I took that one off at 2:12, and then I had my other one get stopped out at 193 at 9:56. So I ended up putting a stop loss around 193 on the contracts, and that ended up taking me out right in here. Looking back, should I have done that? No, I had taken one off. I could have held this thing, let it come back, test. If it broke the VWAP, get out. I walked away and said, okay, I'll put a stop loss on it and go get something to eat or whatever. And then unfortunately, we pop right back up, stop me out, pop right back up. And it technically went a bit higher. I'll see if I can go back to those contracts and see. They ended up going up to a high of around just shy of 230, so about 229. Maybe I could have milked a few bucks there. Probably could have been a green trade, not a slightly red trade, but that's the deal on that one. I'm not a huge fan. As I got in, I kind of was like, if I let the day play out a bit more, I would have noticed a lot more choppiness. The trend was up, sure, but I'm not necessarily playing a dip buy strategy here. I'm looking for momentum. And so it didn't really work out too well. It wasn't bad, but it wasn't great, right? As the trade developed, it was a lot more choppy than I thought. Still holding VWAP, but just a little choppier, right? So I was looking for more of a steady push on that one. So next trade was NVIDIA. It's kind of a nice one here. One contract at the time. I think I was in the apples as well, which is why I took one contract. Yeah, because I see I bought it at 9:16 and I sold it at 9:27. So about 10 minutes in. So I can pull up NVIDIA and show you what I mean by that. So 9:16, like I can go back. I don't have anything drawn here. I drew it on my Webull charts because I was trading on Webull, not on TradingView. But I had this level charted out right here. This candle is the 920 candle. This is the one I bought on the 916 mark right in there. At the beginning of that candle as we broke through. And I had a quick pop up into here. Double top high, pulled back. It actually went higher, but I believe I sold within 10 minutes. So within this push right here. Why? Because my stop loss was going to be right under here, okay, which is near the VWAP. So if you do the math, that's going to be, let's just do a risk reward profile. That would put me at, I was sitting at this point in time, well, a little over a 1-to-1, and I was already in a position, so I just took the gains here, and we had a nice push for about 10 minutes up here and a double top high, nice spot to take profits. Looking back, if I had more contracts, what would I have done here? I would have not have sold all of them. I would have sold one contract on this push. Then I would have held a contract. If we fell back below VWAP, I would have stopped it out. If we did not, I could have held more for the ride, had a little bit more to squeak out. But to be honest, it didn't squeak out that much more. If you look at the contracts and the pricing of them, what they do? Well, when I got in and out, pretty quick move, they ended up going to, I got out at around, let's see where this thing is, 269. The highs, they were up around 325. So I could have squeaked out a decent amount more looking back, but I would have had to hold it through a move down towards 227. Yeah, it would have been 10 cents down on my contract. It would have been terrible. But if I had multiple contracts, I probably would have done that. In this case, I did not. That was the setup. That was the play on NVIDIA. It's nothing insane, simple. My favorite trade was this one, though. By far, I like this one the most. Microsoft. So Microsoft, we played this one at after 10. So 10, 11 a.m. and then sold 10:21 and 10:25. So let's go look at this one right here. This is my favorite trade of the day. Microsoft, clear level that I established right here. So we had the highs of the morning, and then we were doing is like beautiful. We were just building higher lows up into this zone. Now, hey, if we're going to reject, fine, no big deal, right? If I get in on this break and we end up having a false breakout, I know my stop loss is going to be like right under here. We fail this recent higher low. It tells me, hey, the trade's not working. What was there is no longer, what was strong is no longer strong. I'm going to get out. SPY was strong, Apple strong, NVIDIA, AMD, Tesla, they were all strong. So all the big names are strong. So enter on the break. Okay, we get in, and then we get a quick push. I took one off like right into this push. And then I think I took the next one off right up in here as well, or somewhere along those lines. Let's go back in time and check it out. So when did I get out? I got in at 2 contracts at 285, sold the first one at 310, and the next one at 335. They went to a high of just about 375. So there was more there. 375 was a high for a bit, but I sold on that way up. I'm not going to complain. You get a move like that, right? Especially when you're looking at this risk reward profile, right? To those higher lows. What do we have? At the peak, you had about a 3 to 1. Where's my 2 to 1 risk reward? My 2 to 1 risk reward was right here, essentially at the top of this second green candle after the breakout. So the first green candle would be this one, the breakout. It was like towards the top of the second green candle. And that was a 2 to 1 risk reward right there. That was why I was happy to take the gains. And luckily I did, because, hey, well, it did actually make a new high to the end of the day, believe it or not. But it ended up kind of fading off later on in the day. And that was the setup. So essentially what we're looking at here is, you know, watching strength across the whole picture of the market, like what's going on elsewhere, right? Do we have consistency among that? And then looking for the setup, looking for the flag break. This is in this situation here, it's a 5-minute chart, you know, go to a 15-minute chart. Maybe it's the 15-minute chart was beautiful. Look at this. I mean, beautiful, like clearly establishing this level. Okay, this candle, when I saw this, I'm like, hey, get ready, get ready, get ready. And then I put my orders in and I get ready to go and I'm good. Now, what I also will do sometimes with this, just to kind of at least cover this, I'm sure it's a question that can get tossed around, is like, how do you buy the break, right? Doesn't the spreads, doesn't it move so fast? What I'll sometimes do is on these contracts, the spreads are tight. You know, your Microsofts, your Apples, Teslas. That's why I'm playing these big names. Like I'm playing the high volume names, Metas. Like they have a lot of volume. The contracts are nice. They're not like super wide spreads. And so what I'll sometimes do is I'll put a buy stop. So I'll go into Webull over here. Let's just say here's AMD, right? Let's say I want to buy AMD once these contracts on the right hand side. Let me get myself off the screen. Let's say I want to buy AMD when the contracts get above 80 cents. I'll go in here, put up 2 contracts, and put a buy stop. See where it says on the order entry here, on the ladder. I'll put a buy stop at like 81 cents or 80 cents, whatever the number is. And now we've got a buy stop order at 81 cents. So once it hits that and above, I'll get triggered. Maybe I get a fill at 82. No big deal. I don't really care. And then I'm in. So I'm waiting for it to break. And that's only something I will do when I can see the contracts. Okay, here's where they hit up to last time. If they break that would essentially equal a breakout on the chart, should equal a breakout on the stock chart, and I'm going to take that. So that's what I'll do sometimes. Not all the time, but sometimes there on entering and exiting. It's a different style, I think, than maybe some are used to. Then it's slightly different from what I used to do. However, I like it a lot more because you're here with the momentum. It's either going to work or it's not. You're not buying a dip. And when you're buying a dip, the problem with the dip is that you just don't know how long, because you're buying into weakness, let's say, or you're shorting a pop. Like you're going against the trend. Now, could that provide it, and does it provide some of the biggest returns? I think it does. The thing is, it might take longer for you to know if you're right. And I think sitting there for hours sometimes, because it's technically still viable and trade's valid and whatever, and it's too much. And I'm not trying to sit here all day. So it's like, if I see the setups I like, great, I come in, I take the trades, and if I don't, then you walk away and do whatever else. So hopefully this video was helpful. Again, I'm not sizing in too much. A couple contracts here across these guys, and it's the way that I kind of view it is like, hey, give me a couple of weeks that I can see consistency like that. Give me a month of consistency like this, and then we'll kind of talk and we'll see where we're at. And then we'll really get a good feel for how this system works and how I'm handling it and how I'm executing in the system. So with that said, thank you guys so much for watching. I will see you in a future video. Any links, resources down below. Thumbs up button and consider subscribing. Peace.